Now I want to pivot over to this wonderful world of critical audit matters and key audit matters. Let's dive through and see what we've got here. Well, critical audit matters, these are matters arising from the current period audit of the financial statements that were communicated or required to be communicated to the audit committee and that relate to accounts or disclosures that are material to the financial statements and involved are especially challenging, subjective, or complex judgments. Now, keep in mind, if you had just stopped here and said matters arising from the current period that were communicated or required to be communicated, that could be disagreements with management. However, we read further, and it's really these 2 points here. These are just matters within a specific audit testing or determination of specific accounts, judgments, estimates that we want to communicate, and not only want, we need to communicate to those charged with governance. This is a critical audit matter. We'll also see what a key audit matter is. Just diving in further here. The communication of critical audit matters does not alter in any way the opinion on the financial statements. So it doesn't have an impact there. Now, what you are communicating could have had an impact, but just because it's a critical audit matter doesn't mean it's a positive opinion, negative opinion, anything like that. Just keep that in mind. So, what does that mean? If there is a significant problem with cash and cash is materially misstated, well, there will be a modified opinion because of the misstatement of cash, not because that happens to be a critical audit. So the communication of critical audit matters does not alter the opinion. It's the underlying issue, potentially. And the auditor is not, by communicating critical audit matters, providing separate opinions on the critical audit matters or on the accounts or disclosures to which they relate. So these are, I don't want to call them separate reports, right? But these are separate communications to the audit committee, to those charged with governance. So you're communicating, obviously, the opinion and the audit report, but you're also communicating these critical audit matters independently, as their own items. Whereas management has its own responsibilities over items such as its representation in the financial statements, the auditor has responsibility over these critical audit. And all responsibility for these matters should be explicitly stated. For each critical audit matter identified, the auditor should include a reference to the relevant financial statement accounts, a description of how it was addressed, and the reasons that the auditor believes the issue is a critical audit matter. So these are just items that you want to bring particular attention to that relate to accounts or disclosures that are material. So they're material items that involve challenging, subjective, or complex judgments. This is a lot of background to it, some items to memorize. This is really what I want you to know for now as we continue to dive further into the topic. Key audit matters. What are these? Well, we said critical, now we're seeing key. Key audit matters are those matters that were communicated with those charged with governance and in our professional judgment were of most significance in our audit of the financial statements of the current period. Before, we had our critical audit matters. They involved significant judgment. These are just items that were of the most significance to the audit. These matters were addressed in the context of our audit of the financial statements as a whole and informing our opinion, and we do not provide a separate opinion on these matters. Again, that's what we saw for our critical audit matters. Key audit matters are selected from matters communicated with those charged with governance. Maybe a disagreement with management was so significant that you want to make it a key audit matter. That could be one. Just keeping this in mind as we continue on forward. So just keep in mind what we've seen so far, memorize what these both are, memorize their definitions based on what you've seen on these slides. Here is a little more elaboration on our key audit matters. So communicating key audit matters in the auditor's report is done in the context of the auditor having formed an opinion on the financial statements as a whole. Communicating key audit matters in the report does not constitute the following. It is not a substitute for disclosures in the financial statements that the applicable reporting framework, which is GAAP, requires management to make or that are otherwise necessary to achieve fair presentation. It does not act as a substitute for the auditor express a modified opinion when required to do so. It's not a substitute for reporting if after considering identified conditions or events and management's plans, the auditor concludes a substantial doubt about the entity's ability to continue as a going concern, and it is not a separate opinion on individual matters. These are items that you're bringing attention to for the purpose of the audit committee for those charged with governance. Think of it like an executive summary. That's a great way to think about it. What are items that are so important we want to bring them out to attention and specifically point them? It's not a substitute for any of these. These items must be separately considered. Communicating key audit matters. Now, this is taken from, as you can tell by the more formal language, it's taken from the AICPA's authoritative literature. This section applies to an audit of a complete set of general purpose financial statements when the auditor is engaged to communicate key audit matters. The auditor is prohibited from communicating these matters when the auditor expresses an adverse opinion or disclaims an opinion on the financial statements unless such reporting is required by law. Here's an important point to keep in mind. You're only going to communicate these key audit matters when you're giving a clean opinion or a qualified opinion. Another name for a qualified opinion is an except for an opinion, just as we saw earlier. The auditor should not communicate a matter in this key audit matter section of the auditor's report when the auditor would be required to modify the opinion. And the reason why we can do it with a qualified opinion is because it's technically an except for this type of opinion. Key audit matter descriptions. The description of each key audit matter in the key audit matter section of the auditor's report should include a reference to the related disclosures. If any in the financial statements, it should address these items, why the matter was considered to be one of the most significant in the audit and therefore determined to be a key audit matter, and how it was addressed during the audit. Just memorizing all these points, understanding what constitutes a key audit matter. We've had all this talk about CAMs, our CCAMs, our KCAMs here. Now let's actually go through some examples. We know that our critical audit matters have that great deal of subjectivity. And just as I thought that working in tax would be pretty black and white, I soon learned that there is a great level of subjectivity and arguing with the IRS, gray areas, making points for why we should get certain deductions and trying to argue for certain tax positions. So too is revenue recognition sometimes going to be related to subjectivity. Obviously, if you've got something as simple as I sold a product, I recognize the revenue then, that's simple. However, maybe you have these complex long-term contracts that are going to require significant estimates in recognizing revenue and complex legal terms, right? So that is going to affect the ability to recognize revenue, related reserves, valuation of long-lived assets, right? Valuing long-term assets, especially if there are not similar assets out there, is going to be super complex. Valuing derivatives, valuing goodwill, all of these are going to require a level of subjectivity and estimates. Valuating investments in unconsolidated entities, revenue recognition from performance-based contracts, and lastly, valuing inventory. As you see, these all share those characteristics of being a critical audit matter. Next, we have these key audit matters, and these are those important points that you want to make note of, such as evaluation of internal control over financial reporting. That's huge. I mean, first off, that's just huge. That's pretty dang important. Evaluating deferred tax assets, that's also another important point. Impairment of long-lived assets, that's huge. That's a point that you could have conflicts on, a point you want to make sure you discuss. Related party transactions, as always, going to be important to make sure those are properly disclosed. Valuing investments in equity securities, hopefully that's not overstated. We want to make sure that we understand that point and make a big deal of getting to the bottom of it. Reviewing accounting estimates related to income taxes. And lastly, the assessment of the going concern assumption, obviously pretty big there. We want to make sure that we're going to be in business, at least for the next year, that we're able to pay our debts and there's no concern. And if there is a concern, that it's properly stated, properly disclosed. Let's dive in a little bit more these two types of audit matters. What are the differences? Now, we talked about examples and we talked about brief differences, but CAMs, we see critical audit matters relate to issuers, whereas key audit matters relate to non-issuers. Important point there. Now let's kind of think about the reason why. Well, these are going to relate with a great deal of subjectivity, and which I would say is, I say like a little bit more important, because this is an area where there could be discussion, there could be conflicts, there could be discourse. So we want to make sure that we have higher standards for issuers, as we mentioned many times throughout the course, because issuers have the ability to sell their shares to the general public who possibly are not as educated as these so-called sophisticated investors. That's a whole non-CPA exam related topic I'd love to have if anyone wants to talk about that whole being an accredited investor. So related to issuers, and these are required to be mentioned in the audit report. If there were no CAMs during the audit, then the auditor would include a statement that no CAMs were identified. So these critical audit matters, because there is a great level of subjectivity, that's a way to remember that. That is arguably more important and more critical to issuers, whereas we have these key audit matters that relate to non-issuers, and the auditor would be engaged separately from the audit to report on. So we see that's an important point there, which would not be included in modified reports. So just memorizing these attributes, we saw some of the points here back on that key audit matters slide. Make sure you're familiar with these and you know the difference. Both of these matters are challenging areas of audit, which require a lot of judgment on the part of the auditor. The audit committee of listed entities are required to discuss critical audit matters, which that makes sense, right? Arising from the audit with the auditor. Critical audit matters are matters that, in the auditor's judgment, were of most significance in the audit of the financial statements of the current period. That is something we want to make a point of and remember. Audit committees are required to discuss the auditor's report with the auditor, and the auditor must be given a reasonable opportunity to respond to the audit committee's questions. Lastly, the auditor must discuss key audit matters with the audit committee. Making sure we're familiar with these, we memorize these points, get those free points in the exam, and have a good time while doing so. Here we see just a breakout the components of these audit matters. For our critical audit matters, first we want to identify the critical audit matter. Then we want to describe principal considerations that led the auditor to determine the matter was a critical audit matter. Next, we want to describe how the auditor addressed it in the audit. And then lastly, we want to include a reference of it to the relevant financial statement or disclosure. For our key audit matters, we want to describe why the matter was considered significant and how it was determined to be a key audit matter. Next, we want to describe how the auditor addresses the key audit matter in the audit. And lastly, we want to reference to the relevant financial statement or disclosure. So we see here the difference between these two, just constantly comparing them, making sure that they're distinguished in our mind and we're able to understand the difference. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.